Time frame. Time frame is a timeline for trading. Time frame will depend on the trader and his strategy. Traders who trade in short term mainly target smaller profits with a large number of positions played by the day or week. They commonly use short-term time frames such as M1, M5, M30, and H1. While traders that have less trading volume and hold longer their position open mainly use larger time frames such as H1, H4, and D1. If you go to the platform options for changing the time frame above the graph, they show the following markings. M1, which means 1 minute. In this time frame, each candle represents the price movement of a currency pair within 1 minute. M5, which means 5 minutes, represents the movement within 5 minutes. M15 represents the movement within 15 minutes. M30 represents the movement within half an hour. H1 represents the movement within 1 hour. Then a one candle represents movement within an hour. H4 represents movement within 4 hours. D1 represents a movement during 1 day. So one candle represents the movement of price in the 1 day. W1 means that candle represents a movement in 1 week, and MN tells us that one candle represents the movement within 1 month. Pips is the basic unit that expresses the change in currency price. If the graph have 5 decimal numbers, as in our case, the 5th decimal place is called ticks. 10 ticks represents 1 pip. A pip represents 4th decimal place of the currency pair value. If the currency pair Euro-US dollar worth 1.14355, that means that 1 euro is worth $1.14355. Or if measured in pips, Euro-US dollar currency pair is worth 11,435 pips, aka 114,355 ticks. If the value of the euro rose from 1.14355 to 1.14385, this means that the value of the euro rose by 3 pips against the dollar. In contrast, if the value of the euro fell from 1.14355 to 1.14325, this means that the value of the euro fell by 3 pips against the dollar.